Hello and welcome back to the Dukascopy TV studio. It's Metals Monday here and Erik Bjertnes is back to discuss silver today. Erik, thank you very much for coming back into the studio.
Welcome.
Now, silver typically does not tend to be tied to global market events, instead sticking with international commodity trends. With that in mind, what drivers are we seeing for silver trade in 2013?
Well, I would say that it's very positive, even though we've had a very difficult time. All metals have had a difficult time. And the reason why it's been such a bad February with all the metals, let's say gold and silver more so than the others, is that many mutual funds have been caught short. And so they've been forced to sell at any price because of margin calls. And the second is the uncertainty, which seems to be getting more certain now. I would say that by the end of this year, we'll see the price of silver go from 29, which is today, to about $40, and gold would go up to $1,900 or $2,000, keeping it a parity between gold and silver of about $45 to $50.
You touched there on February prices. If we take a look at this 3-month chart for silver against the US dollar, we can see that prices in February did plummet, and that monthly decline marks a stark turnaround from January when the precious metal climbed 3.7%. With this in mind, how do you see prices then for the rest of 2013?
Well, I'm seeing them going up because of industrial demand increasing for photovoltaic. There is about 0.1 gram of silver equal to 1 watt of photovoltaic. And let's say that the normal family house, an average family house, needs 25,000 watts of photovoltaic, roundabout, which translates into ounces to be 500 ounces. So that ends up, if you multiply by the number of families, houses in the States, it will come to several billion ounces, because there are about 101 million houses in the States.
Could a silver shortage be to blame for these fluctuations, and how far-reaching are the shortages, do you believe?
The situation is due to the uncertainty. The fluctuation is due to the uncertainty, and silver shortage has to do with the industrial demand. There is enough supply of silver to meet the industrial demands, but then when it comes to the let's say user part of the domestic part used at home for silverware or for investment, and then people investing in silver bullion will make the supply short. So that is why demand will increase.
A small constituency of commodity traders are advocating selling copper and gold and buying silver. Is that a sentiment that you would agree with?
I would. Gold is more of an investment metal and a hedge against currencies when there's uncertainty. Gold will go up quite a bit, but silver will go up more because that's also a precious metal and it has investment qualities, but it also has all the different industrial demands, unlike gold. And copper is very much based on demanding construction and for cables, copper cables and so on, and China is continuing to grow, as is India. So we'll see copper increase steadily in demand, but I think silver should increase more than the copper and gold.
Erik, thank you very much for coming in. We look forward to hearing more from you shortly.
Welcome, Natalie.
That's all we've got time for right now. Have a stay tuned to Dukascopy TV for more exclusive interviews. Goodbye for now.